As I warned last video, back in September, that the CPI report would be terrible and probably the PPI report, and they were. So, as you can see from this chart following the NASDAQ, we had a big drop at 5:30 in the morning that tanked the market. Okay, so the CPI reports and the PPI reports come out 5:30 in the morning, Pacific time. So those on the East Coast, that's you guys are getting that more normal hours. But us here in the West Coast, we have to be up at 5:30 in the morning to catch these reports and see how it's going to alter the market. So at 5:30, CPI report comes in terrible, market tanks. As I suggested, and I would have been buying here. A 300-point drop is a good buying opportunity. If you were to have bought here, look how much the market went back up. So why did it go down and why did it go up so much? That's just how this market goes. Big drops happen and then people will buy it back. Again, I think this is a short-term trade. The interest rates are probably going to go up 0.75% more. I think you'll see the market go up for a short period, and then the Fed, Powell, is going to come out and speak and basically try and create higher unemployment. So again, the theory from the Fed is to create unemployment, to stop inflation. So in order to stop inflation, the Fed feels that we need to create a lot tougher job market. So they want a higher unemployment. And if their theory is that if the unemployment is higher, the inflation will go down, which I totally disagree because we are still doing things as if we were 100 years ago and isolated from the rest of the world. My belief is inflation is going to be controlled globally because we can only pay people so much and still export goods. So if other countries can't buy our goods because our wages are so high, they're not going to be able to uh, keep jumping wages, and we don't need to have the interest rates climb for that reason. I do think the interest rate should be up, though. I think that the interest rate should be up probably around 5 or 6%. That way, when you retire, you can put money aside and live off the interest rate. For the last 10, 15 years, people have not been able to do that. They have no choice but to leave the money in the market. And what's happening to a lot of retired people is they're losing a lot of money in their 401k, and they're in a position where they have to withdraw just to survive, but the market's down, so they're selling on lows. Again, that's why I keep money loaded in a money market, ready to buy for these situations. To be honest, I didn't buy because this month fishing was my priority, and I was just out of the market for this time. The fishing season for salmon are pretty much closed, so I'll be back in the market. But again, I would have been buying on these dips and looking for a rebound. In fact, I probably would have already sold some of my stocks. If you get a NASDAQ that goes, we'll take a look at the history here. Yesterday, after the CPI report came out, it tanked down to the low here is 10,400, and then it went all the way up back up to 11,000. You're looking at almost 600-point gain in a single day. 600 points, I'll probably take my profits off the table in a market that's this crazy and has no reason for continuing up, but really has no reason to come back down. I think we're kind of stuck in a situation where you got to take profits. Really, the market should just be flat. There should be nothing going on, but we got a massive heartbeat going on, and if it's fluctuating up and down, it's a good time to trade. I don't really encourage the day trading, but it is what it is. So um, that's what I was trying to warn you on last couple weeks ago, September 30th, that we would have a bad CPI report most likely. The market would tank on that news. After all that capitulation happens, then all of a sudden everybody just buys back on that low. So we had the producer price index, that's the PPI report, came out October 12th. It came in higher than forecasted. Of course, it's going to come in higher. They're comparing numbers to last year, not from month to month. So when you look at something like this, here's the CPI report. They're showing forecasted interest rates, but these are not interest rates. It didn't go up from May to June 8%, and then from June to July 9%. Okay, so these are your actuals, and the reason why these are green is because they went up higher than what was forecasted. So this is what we thought was going to happen. Forecasted 8.1, the actual number came in at 8.2, which was higher than expected, but really not very much at all. To me, that's pretty much big deal. It's up 0.2%, 0.1% on these 2 months. It's down 0.2% here from the forecast. So again, the bottom line is when you compare the numbers from last year to this year, yeah, it's going to be higher. So looking at this, starting back last year in November, these numbers kept going up and up and up. But again, they're basing them from last year. So I would say by the time November comes up, I don't think we're going to see 8% again from this 6%. Although they're probably going to forecast a number, and we'll probably go over the number that they forecasted. And even if it were like 4%, people are going to, oh, it's up. So the thing is again, I'm trying to say I would be a long-term investor, but these numbers do have drastic effects, and with the market the way it is, you pretty much got to take profits when you can. But I haven't been telling anybody to buy really because I've been busy fishing. So I did warn you though that this was coming. All right, I hope that helps you understand here the PPI. Oh, so if you don't know what this consumer price index is, basically it's the price of goods that the consumers are paying for. So you and I, when we go to the grocery store, when we buy cars or whatever, this is our inflation rate versus the PPI, which is the producer price index. That's how much companies are paying to buy their goods. So semiconductor companies are buying raw products, and their products are up 8.5%, or whatever companies, automobile companies, whatever companies are producing things, they're going to show the inflation for what they are paying. And typically, if the producer price index is up, that's going to mean that they got to pass the cost on to the consumers, which is going to affect the consumer price index. All right, so if you don't know what those are, you can go check that out yourself. CPI report, PPI reports, and you can look up dates when they come out. Just do Google searches, and you'll know when the next dates are coming. And those are often good times to buy. So if I do a search here, I guess I'll just do it. You do a CPI report dates, scheduled releases. So our next one is going to be November 10th to show inflation through October. So again, just take a look at the chart here. Look how much it went up. And I probably would, honestly, I probably would have sold somewhere around here at 400 or 500 gains. I don't know if I probably wouldn't have held on for 600 points. I mean, got 300 points up from being down here. Just going from here up to where it was is a good buying point. Just you could literally get all your money back in a single moment here. We're talking about only hours. This was at 9:30 in the morning. That's Eastern time when the market opens. And then you look here, this was at 11:42. So 2 hours later, you're up almost 600, 500 plus points. So that's a huge gain. It is currently 9:49. That's 6:49 in the morning Pacific time. You see that it had a peak, and it's already kind of coming down pretty hard right now. So yeah, again, hard for me not to want to short here, but we are so low. I don't like shorting when we're on 52-week lows. I feel like we've already gotten on the low. You're gambling to buy or sell. So if you're going to short, you're going to be selling here. If you're shorting and you're shorting on 52-week lows, to me that's as big a gamble as buying on 52-week highs. If you're on a massive 52-week high in a very short term, for me that's not a good buying opportunity. And buying on a shorting a market when it's already down massively from the last 3 months, I think it's a really high risk move. So I guess right now, ride this ship out. We're looking for the Fed to speak next. He's probably going to jack the rates up 0.75%. We'll see how that goes.